The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to The Trade. Before we get into the technicals, let's have a quick look at what traders are watching out there. And US President Trump says the US will impose a 35% tariff on imports from Canada next month, also planning to impose blanket tariffs of 15 or 20% on most other trading partners. The Brazilian president has said he wants to find a diplomatic solution to President Trump's threat of 50% tariffs on Brazilian exports, but has vowed to reciprocate like for like if they do take effect on the 1st of August. Meanwhile, the White House has launched a fresh attack on Fed Chair Powell, with a top Trump administration official saying Powell had grossly mismanaged the central bank by running a deficit and for extensive cost overruns for building renovations. And President Trump has told NBC News that he'll make, quote, a major statement on Russia on Monday, without elaborating what it will be about. Well, despite all this, we have seen record highs coming through on the S&P 500. Thomas Atkinson from FX Evolution joins me. Great to see you, Thomas. What are the technicals telling you? Because JPMorgan's Jamie Dimon saying markets are too complacent on the impact of the tariffs.
Yeah, I think I would agree with that. Basically, look, markets obviously don't believe that these tariffs will stick. So that is that they won't actually be held in place for long enough to really make a big difference. And we've seen that, of course, since, as you would say, Liberation Day and the on-off again kind of tariff nature. This has also meant that markets are just basically ignoring it for now and saying it's going to go away. So if we do see these tariffs start to escalate again, similar to what we had in April, I could see some risk being taken off the board. And we actually are starting to see that in institutions. Institutions sold at their fastest rate in the US, according to Bank of America last week, and that's coming at all-time highs. So the question is retail right, which has been the big play so far, or is it institutions getting it more correct now? And they've been a little behind. So we've got this chart here for the S&P 500. Most viewers will be able to tell what this is. It's a trend line. And it's a pretty common one. Most people see this, but it's the previous two highs, the one in 2022 and obviously the one in 2025 at the start of the year. And we're fast approaching that, and we're very close to it. And this is what we call like an inflection point. It's not just tariffs. We've got earnings kicking off, well, really today, tomorrow. But JPMorgan reports on the 15th of July. So a lot of catalysts to potentially cause some risk off here. But now the trends are completely intact in terms of being bullish, but I would agree the tariffs are they're not even being considered right now by the street.
All right, what about with our market? Because we have tested records this week, a pretty flat session today.
Yeah, our market is really struggling at these all-time highs. So we're basically sitting in that what we would call like a consolidation zone or a pullback in time. We reached this 8,600, we sold off, we've reached the 8,600 again. And then we're kind of just consolidating around this area. So what this means for at least me is that I guess I'm more looking at the S&P, so the US market, to see whether we get this risk-off event thanks to the trend line. And I think the Aussie market is doing something similar. It's waiting for a catalyst. Now, the other thing with the Australian market is we need energy and we need materials and metals to start really flying. And some have been, and our big one hasn't been, which is iron ore. So banks are doing okay. Obviously, other sectors are doing all right, but we need energy and materials and metals to really start to fly again. And they've only just started to pick up. So if that happens, we'll get a breakout, and I'd be looking at about 8,650 on the weekly. If we get a nice close above that level, I think that's firmly kind of risk on, at least from the technical space. Good pullback here, though, at least.
Yeah, all right. Let's get into some stock specifics then, because as we start to look at potentially the great rotation into some of these miners, what are you seeing with Fortescue?
Yeah, well, this is one of the ones that I was mentioning. So Fortescue has been terrible, as have a lot of the iron ore stocks, and they've been brought down to relatively significant lows. Now we can see here that we've got a really good technical setup. What we call an inverse head and shoulders, and viewers will be able to see there's 3 little yellow marks, and One is on the left, one is in the middle, and one is on the right. And what that does is that makes a left shoulder, a head, and a right shoulder. And effectively, this is a consolidation or accumulation pattern. So generally speaking, you see these around more major bases. You generally want volume to be higher, which it's okay. And we've just about seen a bullish breakout. So if we keep seeing a little bit of strength here in Fortescue, let's say it breaks 1710, 1715, and actually gets a weekly close in particular, that could take us back up to those 20 levels from a technical base. And I don't mind what I'm seeing here. I mean, I think everyone's sick of iron ore in terms of a lot of traders and investors. And that's the type of time that I usually like to look at it because, when everyone's sick of it, it often gets rotated into. And there's been a lot of excitement, I would say, just in the last week from early traders. Pretty decent.
Yeah, pretty decent indeed. I like those little yellow smiley faces. Let's have a look at...
Yeah, smiley faces.
Let's have a look at Cochlear.
Yeah, so another stock. This one here, actually, probably the best trade was about 3-4 weeks ago when it had this exceptionally strong rejection. I've included this for the audience just so they can kind of, imprint this type of setup in their mind and start to look at markets a little differently. So I've got a red arrow pointed towards this massive rejection candle, and that also comes off huge volume down the bottom. And this is one of those classic, everything looks terrible, and then all of a sudden it completely rejects that, and was probably, it's probably some news event. But realistically, this is the type of thing that you often do look for in basing patterns or consolidation patterns. That was a nice move. Now we reached the trend line. So similar to the S&P, we've got a kind of resistance happening here. If we break through, that could be, maybe we're going towards 340. So very important level here for Cochlear. I'm certainly watching it, and I'm more importantly watching the S&P. But if the S&P keeps plowing higher, I don't see why other stocks won't potentially want to come along, and Cochlear may be a good breakup.
Yeah, and Thomas, what else is plowing higher is Bitcoin. Fresh records again for the cryptocurrency, and kind of timely after the RBA announced that pilot into CBDCs. What are we seeing with the Bitcoin price?
Yeah, I really enjoyed this one. This was actually a very textbook, again, pullback in time or sideways market at all-time highs. So this was an excellent breakout. I've been discussing this consolidation for a while. I really got bullish on it last week because I thought that everything was kind of setting up this way. I really think the big thing here is that deregulation story in the US, being able to use crypto, Bitcoin to buy a house potentially, and being and not even having to sell the Bitcoin, like how that plays ultimately. But, all this other stuff that's going on in the crypto world with tokenization and all sorts of things. And the banks are in it now. So I have an interesting stat. I'm not sure if this is exactly correct, so maybe someone can cross-check me here. But obviously people will be familiar with MSTR. And this stock has become very famous because, of course, it's trading at a higher multiple to Bitcoin. But it looks like there's heaps of them now. And I think combined, they hold between around 2 to 3-ish%, maybe even 3-ish% of all Bitcoin holdings. So clearly there's a bit of liquidity dry up as well. Nice breakup plus 108, I thought was a key level, 110-ish. And now, most people have, at least a lot of technicals have Fibonacci's that are sitting around 125. So not sure it's going to get there straight away, but that's a big breakout and does show there's momentum here.
Yeah, something like 2.6%. You're pretty much there of the all-time Bitcoin. That's incredible. All right, and a final quick word at silver and what we're seeing in terms of a breakout here.
Yeah, so similar to some of the other metals, we've been on the show quite a few times, of course. It's always great to be on here. And one of the things that we've liked for 2-3 years was gold. And then about 3 months ago, it really started to turn more into the silver side. And the reason is just the silver-gold ratio. Now, this one is another, similar to Bitcoin in some ways, a consolidation at the peak. And what I highlighted here for just people to look at is the daily 20 moving average, which is that red line. And it seems to be hugging that pretty well. It's often respected it when it's gone on runs. And we've just seen a break up to 37. If we get a nice weekly above 37, 20, 37, 30 kind of area, that kind of signals, again, flow is starting to move into silver again. So it's a Bitcoin movement, it's a silver movement, and these are often seen as, I wouldn't say hedges, but certainly pseudo geopolitical plays and stuff like that. So really, really cool to see so many great technical setups. And I think that's the exciting thing about 2025. There's there's a lot of opportunity out there and a lot of abundance. So always keep looking and never take too much risk. That's the big thing.
Indeed. All right, Thomas, thank you. As always, have a great weekend. Thomas Atkinson there. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.